Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. S&P 500. The market wants a Fed rate cut soon, but not because it urgently needs one. Despite sticky inflation and a weak jobs report, the S&P 500 is holding near record highs, supported by rising earnings forecasts, calm credit markets, and sector rotations beyond mega-cap tech. Wall Street is betting on a September cut, 80% odds, yet equities look strong enough to manage without it, suggesting a cut would be a nice-to-have rather than a need. Historically, stocks rally when the Fed resumes easing after a pause. Powell's Jackson Hole speech may push back on September cut expectations, with bond yields offering the real signal of risk. Current market resilience echoes past sharp recoveries like 1998 and 2018, though seasonal volatility and a potential pullback remain likely. SPX USD on daily chart. The S&P 500 has cleanly broken above the 6,150 resistance zone, turning it into fresh support. As long as price holds above this level, momentum favor further upside, with pullbacks likely to be bought. A sustained drop back below 6,150 would warn of a potential bull trap. Ethereum. ETH is showing strong momentum as institutional investors continue to accumulate despite recent volatility. Bitmine and other firms have collectively added billions in ETH reserves, while whales have quietly withdrawn hundreds of millions worth of tokens from exchanges, signaling confidence in long-term value. ETH recently broke above $4,700, its highest since 2022, before pulling back slightly, with institutions holding firm even as retail traders took profits. Corporate pivots are also boosting sentiment, with Peter Thiel-backed 180 Life Sciences rebranding as Ethzilla after loading up on $350 million worth of ETH. Analysts now see Ethereum within striking distance of its all-time high and forecast potential moves toward $10,000 by year-end, fueled by ETF inflows, staking demand, and growing adoption in DeFi and smart contracts. ETH USD on weekly chart. ETH USD weekly chart is breaking the $4,000 resistance zone, a level that capped rallies multiple times in the past. A clean breakout above this area could open the path toward the $5,000 region, but we assume it might trigger profit-taking and a pullback first. Gold. Gold prices steadied but remain under pressure, facing for a weekly loss as stronger U.S. inflation data tempered expectations of aggressive Federal Reserve rate cuts. Gold held near $3,336 per ounce, down about 1.8% for the week. The hot producer price index fueled concerns over sticky inflation, reducing the likelihood of a larger 50 basis point cut in September and weighing on non-yielding assets like gold. Still, the dollar's pullback and persistent geopolitical risks, highlighted by the high-stakes Trump-Putin summit in Alaska, continue to lend support to gold's safe haven appeal. Analysts argue that while short-term pressure may linger, gold's long-term outlook remains bullish, underpinned by rising tariffs, slowing global growth, and expectations of eventual Fed easing. XAU USD on daily chart. Gold is consolidating between $3,300 support, aligned with the rising trend line, and $3,430 resistance. A breakout above green zone would signal bullish continuation, while a drop below $3,300 could confirm a bearish breakdown and deeper correction. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.